Hello traders, the title of the video is Late Night Fibonacci Trader reveals what professional Fibonacci traders are doing. Do you want to know what the professional Fibonacci traders are doing? Well, you are at the right place and also at the right time. Let's get started without wasting your precious time. Alright, so what is happening? You want to understand what's going on through the mind of the professional traders, and I have a very interesting scenario here. We are looking at IBM, International Business Machines Corporation, a big IBM. Alright, this is an American stock, alright, that belongs to the Dow Jones Index. Alright, so what the professional Fibonacci traders are doing is that if a financial instrument goes up from point A to point B, point A to point B, alright, if we pull back, if we start pulling back, alright, there is a psychological zone that I talked about before, the sweet spot Fibonacci trading zone. For traders that are very new, who do not know what is a sweet spot Fibonacci trading zone, go to www.dayprotrader.com and check out that web page about a sweet spot Fibonacci trading zone. So before you run away and you say to me, George, you're going to say the same thing about sweet spot Fibonacci trading zone, I want you to cool down, to chill out, all right, and to stay with us and to watch the full length of this tutorial, okay? Because I'm going to say something maybe that you do not know before, okay? So when a financial instrument goes from A to B, and you start pulling back, professional will highlight the 50% and the 61.8% Fibonacci retracement level. As you can see here, you want to understand what the professional are doing, professional Fibonacci traders are doing. So this is IBM, all right, goes up from 1994, it comes down here, okay? Came up all the way here. Now, it start going down. So everybody sees this now that it start going down. So people are saying that a correction, all right, is starting. The market is correcting the prior trend, okay? So when they see that, they see this, the price start going down, or which means, so as soon as the bullish trend line is broken, all right, you see, so when it's going up before, it was supported by a bullish trend line, it's broken and the price start going down. The first thing that the professional trader will do after the bullish trend line is broken, all right, or the price out of the pitchfork tool, all right, they will highlight the 50% and the 61.8% Fibonacci retracement zone. Look careful. So you will do exactly the same thing, because why? The professional traders are dominating the market, all right, and there are trading software out there, trading algorithms that are doing exactly the same thing. So as the price is going down, a lot of traders already know this, but I encourage you to stay with me and watch this video in full, because I have not yet finished, but I need to go like this for new traders. Instead of running away very fast with the story, a new trader will be wondering what is he talking about, okay? So they highlight 50%. So what is happening? As if the trend line is broken, all right, there are some bullish order they will place here to buy, all right? This is a very interesting scenario. Generally, remember this, most financial instruments, most company with a solid balance sheet, like Apple, like Google, all right, the blue chip stocks, all right, this one example here, IBM is a blue chip stock, they usually find it very difficult to go below that level, the zone between the 50% and 61.8% level, after a bullish trend. Usually they find it very difficult because they are established company with highly competent management dominating a sector with their know-how or their technology and so on. So as you can see, they did exactly that. You see here, price came into that zone. People bought it, yes or no? Yes, they did. As a swing trader or position trader, or you want to buy call option, those are the time when you can look for opportunity. Remember that it doesn't mean that anytime the price reaches that zone, definitely people will try to buy there. Definitely, they will try to buy there, but it doesn't mean that definitely the price cannot break through it. The price can sometimes Just go through it, and come all the way down to 78.6% level. But 70% of the time, in a normal market environment, you will find it very difficult to cross it after the bullish trend. Now, when people buy here, with the did here for IBM, you can see that they bought it. All right. Okay, you see this volume here, the surge that happened here in that zone, the sweet spot zone, and they bought it all over the place. All right, careful. They respected that zone, yes or no, for IBM because it's an established company. Now, if you are somebody who want to buy and hold, all right, after a bullish trend, those are the area where some investor will come into the market. And also, you see, this is the moving average 200 on a monthly chart. And some professional Fibonacci trader also know about the moving average 200. So after the trend line is broken, especially on the monthly chart, position traders are watching the time when the price will touch that moving average 200. You see there? People say to me, George, we shouldn't be using moving averages. They are too simple. Yes, they are too simple because they are too powerful. All right, here it is. You see how they carefully brought it into that sweet spot zone, and it touched the moving average 200 on the dot, and then from there it just ran away. All this time he was here coming, blah, 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 blah. Now he touched the moving average 200. So there are trading algorithms that are placing orders along the moving average 200 on a monthly chart. So here, push, 2008, did you remember that? The financial crisis, it touched the moving average 200. It's gone. So now, this is it. What's next? This is why I'm saying to you to stay with us. What's next? Professional Fibonacci traders, when the financial instrument pull back to 38.2% level, see this is the 38.2% level, and it start going up, breaking above the prior high, so it pulled back first to 38.2% level, now it start heading up, it breaks above the prior high, they will set a target where? At 161.8% Fibonacci extension level. Remember this is a target level. The price does not go out for no reason. Is headed to specific target level, that level of 161.8% level. But I have not finished yet, okay? So that's the first thing coming into everybody's mind. But because generally, as I was telling you, professional wanting to come into the sweet spot zone, and most importantly, to tie the moving average 200, okay? If the price pull back to the 50% Fibonacci level, all right, like here, professional Fibonacci trader will set their target at 150, 150% Fibonacci extension level. In fact, 150 is not a Fibonacci number, but when we are talking about Fibonacci trading, practical trading, we use also 150. There's one here, you see here. You see this line here, 150, that's why. Okay. Let me draw it on my chart so you can see that 150. It's a very, very important level that trader must watch. So when the price starts, if the trend line is broken first, the first Fibonacci key level that the professional watching is a 38.2% level, and then we'll go to the 50% level, and then sometime you go to the 61.8% level. Are you with me? Okay. Now the price starts going up, and now it breaks above. As soon as it breaks above this resistance here, because this is the prior high, this one here, you need to draw that line on your chart always when you are using Fibonacci. All right. As soon as it breaks above that level, they will use Fibonacci extension and set their target where at 161.8% level. Though the price came all the way to the sweet spot zone between the 50 and the 61.8% level, all right, they will set the target at 161.8% level. Why? That's why I say to you to stay with me. The reason why you need to know what is going on in the financial market and what the professional Fibonacci traders are doing is that if the price comes to 61.8% level, retrace to the 61.8% level, where is the target? The target is what? 138.2% Fibonacci extension level. Some traders will say 127. I say to you 138.2% level. Okay. Because if it comes to 161.8% level, the professional will set the target here. Color that into green. 138.2% level. So normally, if we were using the Fibonacci like a science, we will say that okay, it come down all the way to the 61.8% level. Therefore, the target should be 138.2% level. But why quite often the price, okay, after going from the sweet spot zone, it usually go to 161.8%. You see this one here? Where did he go? He go to the sweet spot zone, as I was explaining to you before. Where did he go? Look at this. Which level? 161.8% level. That's where the professional wanted to go. Do you know? You want to understand that? That's where they wanted to go. 161.8% level. They don't want it to stop at 138.2% level. They want it to go to 161.8% level. It doesn't mean that definitely the price will always go to 161.8% level, but they want it to go there. The reason why they don't want it to stop at 138.2% level, because the 138.2% level is a very tricky place. It's a strong resistance in an uptrend, it's a strong support in a downtrend. So as the price breaks above this high, if we all want to stop here, we can destroy the trend, because according to the Elliott wave, the trend should have 5 components, which are 5 waves. But if, for instance, the price pull to the sweet spot zone during the second Elliott wave, or after the first bullish trend and a pullback, if we stop it here, the bearish trader will love that. They will start selling big time and push it down more. And that can destroy the trend, because according to the Elliott wave, if the price breaks above this high, all right, and goes up more to hit a target level, we don't want it to come back below this high. Why? Because if it come back below this high here, the bearish trader will say that the trend is failing. This is what's happening here now. You see? So you see here, it went inside, it went below this high. You see here, it went below it. And the bearish trader smell that this is very interesting. You see, they say that the trend is weakening, it's going below the prior high of the prior trend. And now you see, as it goes up like this, they are watching, the bearish trader are watching. Now this common setting is kaput. They want it to go back below that level, because if it stay below that high here, that's a good place for the bearish traders. So though the price come down to the sweet spot zone all the way to the 61.8% level of the prior bullish move, all right, if they stop the price at 138.2% level, which is in theory the correct target, because if it comes to 161.8%, theoretically speaking, the correct target is 138.2% level. But we know that if we stop at 138.2% level, the trend may fail. We don't want to destroy the trend. So we push it to the 161.8% level, which is in fact the correct target for the price pulling back to 38.2% level. Now, why you want to understand about the 38.2% level is that psychologically speaking, is the characteristic of a very healthy, bullish trend. In an uptrend, is also the characteristic of a very healthy bearish trend. What do I mean by that? I mean that trend goes up, all right, and then it pull back to 38.2% level, all right. That's the characteristic of a very healthy bullish trend. If the price finds support, all right, that's the first condition. If it finds support at 38.2% level and then breaks above this high, we will say that that's a healthy bullish move. But there are more to that, because the price cannot continue to go up forever. Traders that know about Elliott wave, we can talk about that, all right, after the 4th wave, all right, talking about the 5th wave. But this is something you need to know also. So that's why they don't want to stop it at 138.2% level, because the trend may fail, all right, so they bring it to 161.8. Another reason why the Fibonacci trader, professional trader, need to go to 161.8% level is that if the price goes to 161.8% level And the bullish traders are playing with the mind of the bearish trader, and the bearish trader also understand the game very well because it's a mind game. All right. So the 161.8% Fibonacci extension level is what I call the breakout point, the Fibonacci breakout point. So traders that are following us at daypooltraders.com, there is a playlist about breakout trading, playlist about Fibonacci extension. Check those, and you understand I've talked about it before, and I will not repeat myself again to annoy the other traders. Okay. The reason why they bring it to 161.8, okay, because they want to test that zone, they want to run away from it, because if you manage to go above 161.8% and they find the support, the bullish traders will jump on it and run away with it like a rugby ball. This was going on now. All right? So those are the things if you are trading, all right, anytime. So now you see it came to the sweet spot zone. Where did they bring it? Exactly 161.8% level. And they are happy. They are happy. Professional Fibonacci traders are happy to take profit here now, because we are the monthly chart, and you can see that the correction here took a few years. So there was no bullish trend as such since 2000 to 2009, you see, for IBM. And they know what's going on here. They understand. You see how they respected the sweet spot zone? As they took it from here, they were happy to take profit here. So if you understand those things, you will know where you will look for your trading opportunities. Now, what is happening with IBM? I'm wondering, I'm choosing my word carefully, I'm wondering whether they are testing the below that previous high. Sometimes they will do that. So, but it's not good for bullish trader for the price to come back below this low. But for some of you that are interested to trade IBM at this junction, is that watch this level here, all right? Is it going to form? So we will say to traders, to them, looking at this chart, okay, priority to bullish trading signal above the level of 124.67. Is it going to form a double bottom right there and then before going up? All right. Okay, that is the question. So if implement a top-down trading method above 124.67, okay, if there is a clear-cut bullish trading setup, wait for that candlestick bar to close, because you're on the monthly chart, it will be closed on the 31st of October. All right, wait for it to close first, and then the beginning of November, check it out, keep your eyes on it, and then you can drop down to the weekly chart to monitor the reaction of the price and monitor the candlestick pattern. And then if there is you see how it happened here, you see how they play it along here, it bounce up, they push it back down before they kick it up. So be very patient, all right, or you may have to wait, as it did happen here. Common center is kaput. Okay, so you draw the common center here, and then you go on the daily chart, try to catch it from there, and then bring it up if there is an opportunity. All right, but this is about, okay, late night Fibonacci trader reveal what professional Fibonacci traders are doing. So why, you may say, George, what's that funny name of late night? Well, the time in London is midnight 05. Is it late? Yes, it is. That's why I'm giving a title, or I hope you like that title. So all in all, my friend, okay, all in all, those are the things you need to know, and you want to understand what the professional Fibonacci traders are doing. Again, I haven't finished yet, so because you are my friend and you want to hang around, this is a hangout on YouTube, okay? Hold on a second. Is that... you see, no. You see this move. It went up and then it came to the sweet spot zone. Let's see what has happened here. What are they trying to do here? So that again, price went up from here. Okay, it went all the way up there. So again, what is the 50%? Here it is. Okay, that's a 50% Fibonacci. Okay, I'll color it again in red. Are you getting it now? So you can use the Fibonacci and the 61.8%. Is the pink line there, the line that I was telling you before? All right, that's there, that's the red line. So again, look at that. We are again in a spot zone of what? This move from here to here. By the way, if you are applying this strategy on the hourly time frame, 30-minute time frame, 15-minute time frame, 3-minute time frame, 1-minute time frame, it's not going to work all the time. It's not going to work all the time. So especially new traders, okay, they watch video like the other, they go on their 5-minute time frame, 15-minute time frame. Sometimes it may work, sometimes it may not work. Why? Because we are talking about market noise. Blah, 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 blah. All right. So when you are on the lower time frame, from hourly time frame down, be very careful. Even daily chart, be careful. But on the monthly chart, this is quite consistent for some financial instrument, especially what we call the blue chip stock. All right. So I can go on and on and on and on, all right, talking about other things, but I don't want the video to be too long. So this is, you see again, switch spot zone. All right. Now, there are more to this. So I don't want to confuse you with Elliott wave. It doesn't mean that from here again, it will go to 161.8% level. But you should bear that in mind also. You should bear that in mind also. But it doesn't mean also because we say, if it goes for the sweet spot zone, that's the target. People are professional thinking of 161.8% level. But for us that understand that the price does not go up for a rebound, you see, there was a trend before, and then there was another trend. Okay, so this trend has been in place for some time. So the first one, this is what I want to say to you. The first sweet spot zone usually will try to bring the price to 161.8% level, even go beyond it. Some stocks are very strong, like Apple stock can break to that 161.8. So don't be surprised when it comes here. Sometimes it may continue to go up more, especially during the third Elliott wave, and you'll be saying, what's going on? But, all right? But you want to understand what's going on. That's why we say the 161.8% Fibonacci extension level is a breakout zone. So if he breaks above it and find a support, well, it's going to extend it more and more and more and more. All right, you just trade it, flow with the price, trade around key levels. So this is very important. One more thing before we wrap it up. I'm going to wrap it up soon, 22 minutes, or it's getting long now. Especially in a downtrend, financial instruments that are bearish, remember this, all right, they go down like this, all right. The fundamental is useless, it's poor management. They are crashing under competition. Now, for those who want to short those stock and forget about it, they hedge fund, all right? What they do, they check the management, they check the company, they see how this company is struggling. So price goes down fast, and then they allow you to go to the sweet spot zone of that bearish move. And from there, they will sell it. Once you break below this low, they will keep pushing it down, all right? Up to the 161.8, even beyond that. Okay, so remember that those who want to buy and hold, those who want to sell and hold, combining the Fibonacci sweet spot zone and the fundamental, if they know that the fundamentals are poor, the management is poor, and they are losing market share, if that stock reaches that sweet spot zone after a bearish move down, they're just going to sell it. All right, they're going to sell it. The hedge fund will sell it. On the other hand, if the company like blue chip stock, you see this one, you see, boom, it went off, all right? Where did it come? It comes to the sweet spot zone. Hedge fund were the one buying in the sweet spot zone here. You remember? They are the one buying there. All right? So they combine the Fibonacci trading, the market environment, the macroeconomy market environment. Those are the zone where the hedge fund will take position and they will remain there. So they bought it here since 2002, and they just stay there. They say, yeah, it's an established company, good management player, have a brighter future. Yeah, it's now in the sweet spot zone. You see how they push it into that zone. All right, and they bought it again here, and they take it from there. Doesn't mean that all stock that reaches the sweet spot zone, because you don't want to use it like an automated trading method. This is what's going on. People just buy at the sweet spot zone. Sometimes the price will go below it, and then they're wondering, oh, why this strategy didn't work? Yeah, we are talking also about market timing, or we are talking about top-down trading method. And fundamental traders are looking at us like we are talking about mumbo jumbo. These are real things that you cannot ignore. market timing, top-down trading to exist. And I encourage, all right, fundamental traders, either you outsource those services to help you to time the market. The same thing when we are talking about Elliott wave, people think that it's a joke, all right? It's not a joke. And these things are happening all the time. And the fundamental traders say that, oh, this is a mambo jumbo. And they wonder why the price is going down. But they think that the market does not have a cycle. And this is it, all right? So this will conclude our discussion today about late night. A Fibonacci trader reveals what professional Fibonacci traders are doing. So now you also know it. If you have any question or suggestion, please put in the comment section. In due course, I will be recording another video to answer your specific question. If this video has been useful to you, please let me know by giving us the thumbs up. If you dislike it, please mark it down. If you think it's an essential tutorial that can help other technical Fibonacci traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel, it is free. Please subscribe to our channel today. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. If you are watching this video on Facebook, our channel for Fibonacci trading is Day Pro Traders YouTube channel. Subscribe and stay put. Don't unsubscribe, okay? We want you to stay put, please. All right. If you are watching this on YouTube and you don't know our Facebook page is Stochastic-MACD. The reason why you need to know is because sometimes post a video first on Facebook, sometimes first on YouTube. You say, John, where are you? Oh, I haven't seen you. So you can know where I am, okay, and find me exactly, okay, at the right place. So this will conclude our discussion today about late night. Fibonacci trader reveals what professional Fibonacci traders are doing. The time in London is 13 minutes past midnight. It's late night Fibonacci trading. Before you run away, I want to talk to you about trade idea. If you are interested, if you are somebody looking for golden nuggets, high probability trading setup that can help you improve trading, check out the description section. Look out for trade idea. All right. They are doing, in fact, from the 29th of October to this month to the 2nd of November, they are doing what they call a free test drive. So you can try it, okay, for 5 days. Whether you join them on the 2nd of November, you get 5 days, or you join them on the 1st, you get 5 days. So from the 29th to the 2nd of November, they are doing the free test ride of the trade idea trading software. I will not dwell on it. Check it out in the below in the description section. If you forget, you say, oh, John, you talk about, where is that video? Just go to our website, okay, with www.stochastic-macd.com, www.dayprotrader.com, or www.24AlienWave. You will see a banner, the first banner at the top of the home page. Talking about the home page only, the banner at the top is about the trade idea. I'm not saying to click on the advert unless you are interested in those adverts. I'm saying to you to check the banner, the first banner at the top. It's about trade idea. As always, I appreciate your company and thank you for watching. We are the TSTW 24 traders. Happy trading to you all, and I will speak to you soon.